Hello everyone, this is Jay, and in today's video I wanted to review together with everyone two stocks. One of them the subscriber asked me for my opinion, and then the other one is one that a subscriber is really looking into, and I'm guessing it is to add it to their portfolio. So before we start, please don't forget to hit that like button. I really appreciate the support, and please don't forget to subscribe so you can join me in this journey of growing the dividend portfolio. I really appreciate how the channel is going. So now let's go right into the updates tab, which is where I have both comments. And the very first one is from Tama Sorby 8349. I'm hoping I'm saying it right. So the comment goes this way: thanks for sharing your portfolio and for the videos. What you think about Intuit? So definitely a company that I have never really looked into, but I opened their website to check what products that they have right now. So right here it is a list of their products. So if you go right here into the very first one is TurboTax, which is one that I do use myself personally. So I'm familiar with this one, with this product that they have or app. And with this one, it is used to do your own taxes. Since I started using it, I really like it. So it's definitely one that I use every year, and I really like this product that they have right here. The next one is Credit Karma. I don't use this one, but it is for you to check your own credit score and all that. So it looks pretty cool. Mint. It is one that spend smarter and bank better, get personalized budgets, and find new ways to save without the learning curve. So this one, it looks like it's a budget app, which is pretty cool actually. It keeps track of your subscriptions and where you spend your money. It even tells you when an app increases their monthly payments or something like that, or what they're gonna charge you. So that's pretty cool also. All right, so this is one maybe that I'll look into it to see how it is. And then you have QuickBooks, which is, this one seems like it's for business. Seamlessly connect your business and tools, manage everything in one place. So yeah, so this one is pretty much for businesses. MailChimp, turn emails into revenue. So another one that is pretty much for business, it looks like. Use automated technology to increase customer engagement and sales. So yeah, it's for business also. So if you have your own business, you could take a look into this one, so do your research. Fuel financial prosperity for your clients. That's for ProTax. So it looks like this is another app or product for businesses also. So if you own your own business, you could take a look at these last three. TurboTax is one that I use personally. Mint looks pretty cool, so maybe one that I'll look into it myself personally. But let's go right into Seeking Alpha, which is the website that I use to research stocks. I'm not affiliated with, but it is one that I use personally. All right, so right now, ticker symbol is INTU, name of the company Intuit Inc. It closed yesterday at $561.23. So in the last year, this company, it is up in share price only 45%. Wow, that's definitely good. It doesn't look like it has had any dip as of lately. It just continues to go up. Maybe right here on October 26th, if you wanted to add this company, it would have been nice to add it in this dip right here at the end of October, which it was around 479, 483. This would have been a good price. But yes, let's go into the 5-year return. In share price only, you would have had a 182% return if you invested 5 years ago today. And then if you invested 10 years ago today, you would have had a 659% return. Wow, that's definitely really good returns right there. And it hasn't even made their highest ever, which is around $692. So it hasn't even made it there again yet, and you would have a 600% return. So that looks really good so far. The 52-week range, $571.82 is the 52-week high. So it's closer to that than the 52-week low, which is $370. The EPS is 16.31. The PE is at 34.25, so this is on the pricier side for this company. But if you want to invest in a great company, you're gonna pay pricey price pretty much. If you find it at a fair price, then that will be good. It still be a little bit pricey, but I think this one is looking so far like a great company that you will need to pay to be able to invest in it. Dividend rate, it is $3.60 a share per year. Dividend yield is only 0.64%. Market cap, it is $157 billion for this company. So let's go down. Almost all the analysts are saying that this is a buy and one is a hold. So just do your research and see if you agree with them. But it does look like a good company to invest in the long term. The revenue continues to go up, as you can see right here. In 2022, it went from $12.73 billion to 2023, $14.37 billion. And then it is expected to go up $2 billion a year every year after that. But this is just estimations. This is not real numbers yet. But this is estimated based on their growth, which it looks pretty good then. And then right here, let's go right into the capital. Total debt, they have $6.69 billion on debt, and cash, $3.66 billion in cash. So this is definitely, when you do your research, take a look at the debt to see if it continues to grow. And then also look at the cash flow, make sure that it is continuing to grow. Definitely the cash flow growing, it is better than the debt growing. So because with that cash flow or the free cash flow, it is the one that they use to pay the debt. So those are some things that you definitely want to look into. The dividend yield 0.64%. The payout ratio 21%. Wow, that's definitely on the lower side. So that's good. They have a lot of opportunity to grow that dividend. And then the 5-year growth CAGR for the dividend, 14%. So that definitely makes a lot of sense. Since the payout ratio, it is so low, it is at 21%. Sorry, guys. That they have so much room to grow that dividend. So it's definitely looking really, really good. This one looks like a company that you want to invest for it for the long term. That dividend growth looks really, really good. Then the years of growth, 12 years of growing that dividend. So that's looking really good also. The latest announced dividend was 0.90 cents a share. And then the sorry guys, the ex-dividend date was October 5th, and the payout date was October 17. So that was the last payment, it looks like, for the year. And then you probably won't get paid again until maybe January or February, it looks like. So let's go right into the dividend growth history tab, which is this one right here. And it looks like that dividend just continues to grow as shown in the numbers above. Definitely it is growing really, really good. In 2020, they were paying $2.18 a share per year. 2021, $2.45. In 2022, $2.82. And then this year is looking like $3.60. So it's just continuing to grow that dividend, which is really, really good. The dividend is pretty small. It's only 0.64%. So this company looks very, very good for growth. And I don't think they're gonna stop there, to be honest, in my opinion. I really like TurboTax, and I do believe a lot of people are using that app or that product that they have. I really like this company, actually. I'm gonna add it into my watch list, and I'm gonna do a deeper dive in it myself personally, probably this weekend. This one, it is in the financial sector? Let me take a look which sector. It's actually information technology. So this one will be nice for me to look into, since I only have Apple in that sector right now in my portfolio. So to add another one, it will actually be nice. But this one looks like a growth company more than a dividend company. but it looks really really good actually. So let me do a deeper dive myself personally. I encourage you to also do a deeper dive, but I really like this company actually. That's really my opinion, but please don't take it as financial advice. I'm not a financial advisor. Just do your research, financials, cash flow, debt, their earnings, how are they doing, the return on investment, also return on capital. Just take a look at all that information. So do a very, very good research before you invest into anything that is shared in this video or in this channel. All right, so that's really my opinion. I'll definitely be adding into my watch list. So thank you so much for your comment. Then Legendary, it is the next comment. He's always very active in my channel, which is I really really appreciate your support. Coca-Cola is in my top 5, currently just holding at 101 shares, and that's wow. I definitely wish I had 101 shares of Coca-Cola. That's my favorite company, one of my favorite companies. Not financial advice, guys. And the comment continues to go, only because I am boosting other holdings at the moment. Okay, that's good to know. Good strategy. I am also taking a hard look at Tractor Supply Co. TSCO is the ticker symbol. So let's go right into Seeking Alpha, and let's type in the ticker symbol TSCO. Oh my gosh, let's change it right there. TSCO. So let's click on it. All right, so Tractor Supply Company TSCO, it closed as of yesterday at $197.78. In the last year, it is down 11.53%. So right now, it is on a dip, it looks like. Definitely. In the last month, it is up 5%, but in the last 6 months, it's still down 8.23%. So it looks like it is still down right now on a dip. In the last year, it is down 11%. And then let's check in the last 5 years. It is up 123%. Wow, that's nice, actually. Very, very good return so far. So in the 52-week range, it is closer to the 52-week low of $185 flat. The 52-week high is $251.17. The PE, it is a 19.65. So it is looking pretty good. I like that. Dividend rate, it is $4.12 a year per share, which is not bad. I like that too. That dividend yield, it is only 2.08%. And then the market cap is $21.43 billion. So let's take a look a little bit more into Tractor Supply. So two of the analysts right here, Wall Street SA analysts, saying that this is a buy, and then the third one says that this is a hold also on this one. Tractor Supply Company operates as a lifestyle retailer in the United States. The company offers a selection of merchandise including equine, livestock, pet, and small animal products necessary for their health, care, growth, and containment, hardware, truck, towing, and tool products, seasonal products such as heating products, lawn and garden items, power equipment, gifts, toys, everything. So it looks like they are a little bit diversified. I know I've seen this company, I've seen these stores in a lot of places, especially around here. I've seen one or two of these stores right here. The sector that is at is in the consumer discretionary. And then let's take a look. The revenue looks like it's growing very good, at a pretty good pace. In 2019, they made in revenue $8.35 billion. Then in 2020, $10.62 billion. In 2021, $12.73 billion. And then in 2022, $14.2 billion. And then in 2023, they have an estimated of $14.59 billion. So not as fast of a grower as into it, but it looks like it's growing definitely, that revenue. So something to take a look at. Then let's go down into their debt. So they have $4.98 billion in debt. Cash is they have on hand $421 million. So they definitely have a lot more debt than cash. So just some things that to look into in their financials and see how their debt is growing and their cash flow. If their cash flow is growing, then that's good. Just take a look at their debt. Hopefully they're paying off their debt very good. Dividend yield, as said before, 2.08%. Annual payout, $4.12 a share per year. Payout ratio, 39%, so that's on the lower side, which is good. 5-year growth CAGR for their dividend, 27%. Wow, that's definitely looking really, really good for the 5-year growth CAGR. Their years of growth, 12 years. So this one is definitely looking pretty good. The latest announced dividend was $1.03, $1.03 a share per quarter. And then the ex-dividend date was on November 24th, which it was actually last week. So if you own this company as of last week, you'll be getting paid $1.03 a share on December 12th. So that payment is coming pretty soon in the next couple of weeks, which is nice. So as you see right here, the dividend growth history, it definitely is growing. It was growing on the slower side from what I see right here. In 2020, this was the big jump. It looks like in 2020, they were paying $1.50 a share per year. Then it jumped right up into $2.08 a share per year in 2021. And then it went all the way up in 2022 to $3.68. So this is something that I don't know if it's going to be sustainable. Hopefully it is. If they continue to grow at this pace, it will be nice to own this company or to hold this company. Of course, none of this is financial advice, guys. Just do some more research in their earnings. I personally don't invest in stores, only pretty much on Starbucks because they also have their products everywhere. But this one has very nice numbers from what I see in the first page in Seeking Alpha. I will encourage you to do your research in a little bit deeper in their financials, like their cash flow, total debt, return on investments and all that, or return on capital. But this one looks pretty good. I actually like both of them. I like the way they look. I do like Intuit more, just because I really don't invest in stores myself personally. But that doesn't mean that you need to follow my strategy. Definitely, because I'm not a financial advisor, guys. This is for entertainment purposes only. But this one looks pretty good. Definitely very good returns also. So one that I never looked into it myself. So thank you so much, Legendary, for putting it in the comments. I really appreciate everyone's comments, and I look into them myself personally, and I reply to them myself personally also. And I hope you guys like videos like this where I take your comments and I review the stocks that you guys put in there together with you. I really enjoy doing that. So I really like looking at the comments, and I really appreciate it. I hope you guys like it. And please leave me your opinion in the comment section of these two. What's your opinion in it? On these two stocks, on these two companies. I really like Intuit myself personally. It's going to be one that I'm going to be adding into my watch list, and then hopefully this weekend I have some time, I'll do some more research in it and take a deeper look into their financials in a couple websites, of course. I encourage you that if you do some research, do it in more than one website. There are other ones out there that you can definitely use, that I also use to do research on the stocks. All right, everyone. Please don't forget to hit that like button so you can support this channel, continue to grow, continue to reach other people. It is at over 300 subscribers, which is awesome, and I really, really appreciate it. And I really, really appreciate everyone's support. And subscribe so the channel can continue to grow also. All right, everyone. I hope you guys enjoyed the video, and I'll see you on the next one. Thank you. Disclaimer, I'm not a financial advisor and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.